People are seeking new ways to experience the outdoors. We're seeing a surge in independent operations, everything from private farm stays to off-road auto clubs heading deep into the bush. But before a tent is pitched or an engine revs, these organizers hit an invisible wall. It's the prohibitive, often crushing cost of public liability insurance, the mandatory coverage required in case someone is injured or property is damaged on your watch. This chart illustrates the problem. When the traditional insurance market looks at a single, small-scale outdoor activity, it sees a high-risk, low-reward outlier. The result is a towering red bar of skyrocketing premiums, or an outright denial of coverage. The overhead to operate in the outdoor recreation space becomes so high that only massive corporate entities can afford to play, effectively locking the individual operator out of the landscape. Imagine you're a farmer who wants to open a back paddock for campers, or a local motorcycle club trying to get basic coverage for a weekend ride. The quotes you get back make it mathematically impossible to proceed. That leaves a terrifying alternative: running the event or opening your property with absolutely zero coverage. Without an institutional shield, the individual organizer is completely exposed. If a camper trips on a route or an accident happens on a group ride, you personally absorb 100% of the legal and financial liability. To survive without risking personal bankruptcy, independent operators have to completely rewrite their risk profile in the eyes of institutional insurers. This is where a structural mechanism called a distributing cooperative, specifically the Camping, Outdoors, and Accommodation Cooperative, or COA, steps in to solve the math problem. The entry point is straightforward. Isolated operators pool their resources by purchasing a $250 shareholder membership. That single transaction changes the equation. Instead of thousands of isolated individuals asking for coverage, they merge into one massive, unified negotiating block. Operating on the principle of risk pooling, gathering a large group dilutes the statistical danger of any single operator across the entire base. By banding together, this community of hobbyists and small business owners moves from being seen as high-risk outliers to being treated as a single, managed commercial-scale client. COA leverages this size through two distinct pathways. The first is called programs, designed for entities operating as independent businesses, like a licensed caravan park or an accommodation rental. For these businesses, COA acts as a qualifying gatekeeper. They enforce specific activity codes and strict safety standards before an operator is even allowed to apply for the insurance pool. This funnel diagram shows how the system filters risk. By pre-certifying clients to meet the COA code, the cooperative hands insurers a pre-vetted, low-risk group. This bypasses the usual friction of underwriting. The financial benefit is immediate. Members can buy their own independent, full-spectrum insurance policies at highly discounted rates, slashing premiums by as much as 30%. The business remains its own independent legal entity, but it leverages the cooperative's collective safety record to secure the same specialized rates usually reserved for national chains. The second pathway is called Sanctions, built specifically for smaller, dynamic organizers, people like trip leaders guiding a four-wheel drive convoy, or home hosts letting RVs park in their driveways. Instead of buying an individual policy, sanctioned members are legally designated as officially authorized officials of COA's own activities. As seen here, protection is instantaneous. Organizers and participants step directly underneath COA's $20 million liability and accident insurance umbrella. This legal transfer lifts personal liability off the individual guide, as the risk is entirely absorbed by the cooperative. This structure neutralizes the fear of personal financial ruin. It allows enthusiasts to confidently lead trips and host campers without risking their own homes or savings. Removing that massive liability bottleneck instantly opens up land and outdoor activities that were previously shuttered by insurance costs. We see the outcomes every day. It's driveway surfers resting safely in suburban yards, or ride leaders guiding motorcycle convoys without the threat of a lawsuit over their heads. This group buying power directly lowers the overhead costs across the entire spectrum of outdoor recreation, benefiting everyone from private campers to massive licensed caravan parks. The cooperative system takes the great outdoors back from what was becoming a corporate monopoly, restoring it as an accessible, community-shared asset. The idea of strength in numbers operates here as a highly effective mathematical financial tool. By organizing community ownership of assets and actively pooling risk, everyday people successfully bypass a broken, gate-kept system. A single shareholder membership provides direct entry into a multi-million-dollar institutional insurance network that was previously out of reach for individual owners. The ultimate way to protect your individual liability is to stop fighting the market alone. You protect yourself by merging your risk with the collective.